Welcome to episode 35 of The 5-Minute Investor, the podcast where we break down stocks at the heart of two stories shaping your investing week. I'm Trevor Abbas.
And I'm Jonathan Brown. Each week, we bring one stock, one headline, and one reason why investors should care.
Today, we're talking about Agnico Eagle and Talisker Resources, a pair of stocks that combine gold's safe haven properties with the potential for leverage beyond the spot price thanks to their cash-flowing operations.
My pick, Agnico Eagle Mines Limited, AEM on the TSX, is a stock that has shown notable volatility, but growth lately.
All right, give us the context, John.
So you've heard the news, Trevor. The U.S. government is currently shut down and has been so for around 3 weeks. Gold stocks have been considered a good buy in times like these.
Interesting, but why does it matter to investors?
Because investors want a safe haven asset they can rely on during times of economic uncertainty and market volatility, and that is certainly what we are seeing right now.
I got you, but how did Agnico stock respond?
Agnico was trading at 223 Canadian dollars on the TSX 3 weeks ago when the shutdown began, and hit a peak reaching $263 on October 16th before pulling back a bit, reflecting a roughly 2.5% net gain in that time.
I see. Question for you though, John. Is Agnico an outlier or is the gold miner indicative of a broader trend?
Well, looking overall, Trevor, gold equities have benefited from the broader bullish trend in gold prices, with Canadian and U.S. miners showing strong performance across the board. In the U.S., major gold companies like notable names like Newmont Corporation and AngloGold Ashanti saw year-to-date gains of exceeding 100% and 176% respectively. Then you have other Canadian stocks like Caledonia Mining and Seabridge Gold. They posted year-to-date returns over 200% and 94% respectively. So, speaking of gold stocks, Trevor, your pick is also gaining these days, but represents a more, let's say, entry-level option, right?
That's right, John. My stock, Talisker Resources, ticker TSK on the TSX, is a newly minted gold producer in BC in the midst of a rapid ramp-up in capacity over the next 3 years.
All right, so what's the context behind this one?
Talisker signed a binding term sheet for a 7-year ore purchase agreement with Ocean Partners UK for up to 1,500 tons per day.
Interesting. So why would this news matter to average investors like me?
Well, the partnership follows 2 months of successful gold production at its 1.7 million ounce Braylorn project, including 707 ounces in August and 862 ounces in September, with management seeing the potential to grow the resource by more than 5 million ounces and reach production of 100,000 ounces per year over the medium term. That's more than 100x growth.
Whoa, and how did the stock respond to that news?
Since reaching production in August, Talisker stock has soared by more than 175% to date, trouncing gold's approximately 17% return.
Huh. And I think I was reading somewhere they also have a private placement going too.
That they do. An initial $18.3 million tranche closed on October 24th out of a planned $20 million will help the company advance Braylorn towards 500 tons per day in processing capacity by 2026, with eyes on 1,000 tons per day by 2028, likely resulting in multiple instances of positive news flow from now till then to add to the stock's multi-bagger return.
As always, you can find links to the articles from today's episode in the show notes and more investing insights on stockhouse.com.
And you can find the 5-Minute Investor on Spotify, YouTube, iHeartRadio, Podbean, Stockhouse, or wherever finer podcasts are found. This podcast is produced in partnership with Agnico Eagle Mines and Talisker Resources and is intended for informational purposes only. For full disclaimer information, please visit themarketonline.ca/disclaimer.